Welcome back to another price session trading lesson. Today's structure is starting as a trend range. We have a lot of consistent price swings up and down through the EMA. The supportive indicator, the 21 bar exponential moving average, is for the most part flat. And when I'm watching a trend range, my goal is to always identify the important key levels, the low today support, and the high today resistance, because these important key levels may eventually come into play later on. So you always want to respect them, and you always want to follow the trendline rule. Because right now we have a bullish momentum working higher, there is a reason to price movement, and there is always a pattern these candles are following. We're reading pure price action, so I have to find a channel, and as long as this uptrend is in play, this means I'm not thinking about selling, I'm only thinking about buying. However, I cannot go long far from key entry point, the EMA, like this. On the first entry, I want to see significant pullback to the EMA in the form of a two-legged pullback that would be a high probability setup. So prices are correcting, and notice I'm going to use the counting technique from this high. I'm looking for breaks above bar's high. So we have a first entry long, failed, and we're going to get triggered above this bar. There's going to be a second entry long. Can I take it? I cannot. The signal bar is showing no momentum. It's indecision, pure doji. And also the downtrend is in play, like this. So this means I got to wait. I'm following the trendline rule, but I also follow the trendline rule even for the corrections. What is your main focus? Remember, this is just a correction, and this is the main trend up. The bigger pattern always takes precedence, almost always. Nothing is certain in price action, but 8 or 9 times out of 10, the bigger pattern will prevail. So this is your default thinking. You follow the trendline rule and you expect new high. So your goal is just to let the correction play out. You're thinking, okay, possible high or low, or double trap, attempt for a new extreme. Okay, downtrend played out with the micro break and new low, and we're pushing above EMA. So this is a good sign for the buyers. The fact that you're back above EMA is confirming the bullish momentum. You're gonna get new high, so you're expecting high low. And notice now we have high low, great signal bar. The bias is up. You're at the key entry point, and this is first high probability setup for today. The high low confirmation setup of this double trap. You expect new high. You're following the simple trendline rule, and this is a great high probability setup. It's not congested or anything, and market created new extreme. So now that I have a new extreme, I'm pausing my longs. The trendline rule played out. According to trend range rules, most breakouts will fail. Now, when I'm watching this uptrend is quite significant. It's quite steep. So I don't necessarily want to be fading the breakout. I would need to see a failed second entry long, reverse a pattern below EMA. If there was some significant broad pullback below the EMA and then push up, you can think about fading, but we never really truly stay below EMA significantly. Just for a short period of time, and we still reverse back up, making this steep. So I'm going to be patient. And notice prices keep creating first leg up and another leg up. So you can see prices are a little bit more bullish now. And if I'm going to take a step back and see what is happening here, I can see two swings allowing me to set up the trend line, and I have third swing confirmation. Okay, so there's a possibility that this channel may be in play because we have a couple pushes higher to a new extreme again. But right now we're pushing lower. So when you're observing this and you have many conflicting beliefs, just be patient. Remember, high probability setup needs to fit all the criteria. You don't want to be guessing. You want to make sure you identify the context key entry point, right? The setup is good and there is no congestion. The signal bar is good. So you don't want to be guessing. If you're thinking about selling, which is reasonable, you want to take failed second entry long reversal pattern. Reversal pattern will tell you that the market is reversing. You cannot take lower high because this was already quite a deep push down and it already made a significant portion down. You would need to see a second entry short EMA holding, and this uptrend may be in play. So we're not sure if this uptrend is not in play because this was quite a steep move up. So I'm going to be patient. Okay, and I can see prices pushing above EMA, which is significant information. This means that this uptrend was valid. We're back above EMA, and notice this important key level, the resistance, most breakouts fell, tested the breakout area, and it held as a support. This is important for bulls because once the breakout area will shift from resistance acting as a support, you're now thinking bullish. So I have to redraw the uptrend like this. And what am I expecting? New high for this uptrend because the trend has evolved, and I'm expecting failed second entry short above the EMA. And now we have failed second entry short. New low, first entry short, pullback, second entry short. Now, is this failed second entry short good? Not really, because the signal bar is far away from the EMA with the body, and it was right after this very steep bullish spike. However, this is more nuanced, and you need to have experience to develop a gut feeling for you to be able to recognize this. Because you may be wondering, okay, Thomas, why it is okay to take this setup, which is not fully at the EMA with the body, and not this setup? And this is a valid question. For this reason, I'm marking this setup because it is quite hard without experience and develop gut feeling to recognize this little clue. Here, when we're talking about high or low, the context is different. It's much easier to identify. Here we have clear steep uptrend that clearly needs to get new high. Downtrend played out, you're back above EMA, and there is no bearish thesis. Just uptrend that needs new high, EMA keeps holding, and a great high low. However, here the context is not that simple, because what if this downtrend is going to get second leg down and new low? What if there's going to be a failed breakout? Is this trend line really valid? You have multiple factors that are right now coming into play, and you need to reanalyze. So here the context is simple. You can risk it here on a good momentum. Here it's a little bit tricky. Also, this is very steep, and market cannot continue working higher and a 90-degree angle to the upside like this. There's generally going to be a deeper pullback to the trend line. So you can see how far away this is. But if you took it, not a bad setup. And notice this is interesting, because everybody who took the earlier failed second entry short got trapped, and this is still visual part of failed second entry short, and also kind of like a micro first entry long, second entry long. Great signal bar, EMA keeps holding. A lot of sales are going to get trapped, and we need to get new highs. So this is actually the setup that you want to take. I took this setup myself because now you correct it fully after this steep push to this trend channel line. There's a significant pullback, EMA keeps holding, great signal bar, and the uptrend needs to get new extreme. Okay, we have new high, so I need to pause looking to buy. However, we are still above this key level, so prices are a little bit bullish. I cannot go long because we have break new high, but it's a little bit early to sell because we have a failed second entry long, which is tempting. Yes, the downtrend is new low, but you're above EMA. It just feels a little bit too early. Okay, we have a new low, and I'm just following price action, using the trend lines, trying to identify the key levels. Okay, we have quite a significant bullish push here, but had this triple test close a little bit closer to this key level, you can consider, because you have two broad legs down, the market likes to move in pairs of twos, but you're still quite far away from this key level, you know, so you may do it like this, not a bad setup, it just didn't form that well, and market keeps trending higher. Okay, so when I'm watching this is a little bit too bullish, so I'm going to look for a little bit wider channel, something like this. You can copy it, put it at the top, but notice I have overshoot, so I'm going to mark overshoot, which means I expect stronger bearish momentum. Overshoot can either break the trend line or possibly reverse the market. So if I'm going to get second entry long here, which I have, I cannot take it. After overshoot, I need to be patient. There's going to be stronger bearish momentum. The channel may be wider, so I'm being patient, not taking this. And market keeps trending to the downside. So I'm going to make my channel wider because of the overshoot. Prices keep trending lower, and notice we are trending all the way down like this. Now, when I'm watching this and I'm playing this channel, the downtrend with the uptrend, the downtrend also has overshoot. So I cannot go short just yet. The EMA is going to be important. If we're going to stay above EMA, we expect new high for the uptrend. If we're going to push below, we expect new low for the downtrend. And prices keep pushing lower. Okay, I'm going to take a step back and I'm going to identify a better channel, because this channel is not the best one. I took a step back and I adjusted it at this point to channel like this with the break and new extreme, but I want to guide you through the thought process in case you're playing the wider channel. The reason why I didn't eventually widen this like this and I chose the wider one, because it is rare you keep widening so many channels right after the first widening, let's say. So because we widened from this tighter one to this one and now again to this one, this doesn't happen often. There's generally a bigger pattern. But once I see that the EMA is not holding, we keep trending lower. Okay, I need to take a step back, reanalyze the structure in retrospect, and there's nothing wrong with this. You can still just be patient and see, okay, I was wrong, I misread it, but now the trend is down. We expect new low for this downtrend because we are back below EMA. This downtrend needs to get new extreme. We retrace too far down. Okay, we have a new high, first entry long, second entry long feather. I cannot take so far away from EMA. Bad bar so close to these lows. But notice what we have. Micro double bottom resist account. First entry short, pull back, second entry short. So we have a second entry short off the EMA while this downtrend needs to get new extreme. Decent high probability setup. Second entry short at the key entry point. downtrend needs to get new extreme, and because you're back below EMA after overshoot played out, you can trust it, and market keeps trending lower. Now you can see the blue rectangle. This is because the FOMC announcement news are going to be triggered within 1 hour, and you want to make sure you're not trading at least 30 minutes before and after the news, because the volatility will increase. It's a lot of whipsaw. You can get stopped. Even if you get the direction right, there can be a little fake out. You may have slippage. Your stop will not have its protective abilities, so you may lose a lot just because you're trying to be fancy and trade the new structure. You can't trade it profitably. There's always going to be some whipsaw, always some malfunction. You're better off just waiting, let the news play out, let the storm to pass, and then trade safely again. So price action keeps working low like this. You can see this is the area where the news were announced. So prices keep trending to the downside. I'm just going to quickly zoom after. Okay, prices keep trending lower. Now, when I saw this significant bearish push down, I was even playing possible channel like this, but it is a little bit too wide, but it is quite a decent option to play. However, right now the bias is bearish after overshoot. I'm going to redraw uptrend. We have a first entry short. I'm looking for second entry short, but it never formed. Only first entry short. And prices are right now going sideways, back above the EMA. And notice we keep trending higher. So at this point, I'm going to redraw this trend range. Prices are going sideways. I don't really want to go long just yet. This was quite a significant push down after FOMC. Prices keep trending higher. You cannot sell just yet because this is quite a significant bullish trend working higher. You can see this initial channel cannot cover this long price session, so you need to find a channel. You would need to see felt second entry long below EMA. Okay, another rejection by the EMA, and we keep going higher, and price session keeps going higher again. Okay, so at this point, it's starting to be quite obvious that this channel is not coming into play. This is not uncommon for price action that is caused by the news to be a little bit whipsawy, for the price session to be a little bit erratic, because we have push down, break new low, into consolidation, and price action keeps working higher. So if you're actually a trader who was not playing the wider downtrend and is playing basically the recent structure, this is quite tempting second entry long because the EMA keeps holding every single time, and you may be eyeing potentially some bigger channel here. So more advanced trader can consider taking the second entry long, but you need to be focusing on the bullish structure here. But because you can see EMA keeps projecting every single time, this is where you have to clearly adapt. Okay, structure is way too bullish, consistent rejections by the EMA. This is why we're using the EMA. It can help us and guide us to navigate while the structure is reversing. So I have a couple of options how to play the channel. I can use either this one, it's getting a lot of confirmations, or I ended up going with this one, basically completely the same, just that I have a little micro break, which is not that significant. Either way, it fits really well. I'm going to copy it, put it at the top. You have a new high, first entry long, second entry long, and you have a decent second entry long of 2 key entry points. The more key entry points you have, the better, but the downtrend is in play. And I would need to see high-low confirmation setup, which never formed, and market continues working higher. Okay, the price action is correcting. We have a break of this channel, so only thing you're thinking about is getting some nice long setup that is going to be safe because we expect new high. And now we have new high, first entry long, pullback, second entry long. So this right here is a second entry long. Uptrend needs to get new extreme. Signal bar is decent. It was good enough for a scalp, and then market continues going sideways. Now here's a little trick. If you can see that the initial tight channel has a break new high and the price action is stalling like this, get a little bit sideways. If there's going to be felt second entry short, you don't want to take it because this downtrend may get a second leg down. Because it is stalling so much above the EMA like this. This is typical first spike down, consolidation here, so the second leg may follow. Okay, you have a second entry long here, but it's just in the middle of no man's land. If it was at least closer to this low to form some double bottom. So once I'm watching this, I want to see high low above EMA, and high low never formed, and we have new extreme. We technically even have a felt second entry short here, which if there is a great signal bar, you can take it because the bias is bullish and you expect new extreme. So this is the overall structure for the day. Surprisingly, a clear day for FOMC. We didn't have choppy price action. And there's actually one setup that I want to mark, because if you're playing this channel with the break new high, there's actually quite decent low high here, which more advanced trader can consider. It is a little bit far away from the EMA, but if you have a break new high and you can see the bulls are getting trapped here, little breakout pullback as well out of this consolidation, break lower, pullback, testing it, confirming the wider downtrend, you can consider. Unfortunately, I made a mistake. I was playing the wider channel. Even though I had overshoot, you still cannot really go short like this. But overall, decent price action, couple decent setups on the way down, on the way up, easily identifiable uptrend, and then the market just entered a consolidation. So I hope you had a great trading day. I'm going to talk to you next time. Good luck at your trading.